How to get no-doc business loans up to 150,000 or up to 250,000, and how to get an alternative up to 2 million incredibly fast funding, EIDL updates. Along with this one, you'll see how to get 0% interest for 6 to 18 months on this no-doc business loan side of the equation. Is it true? Can I really get started with no documentation? You mean no financials, no bank statements, none of everything else, and so much more? Hi, this is Michael with Viral Funding Solutions, and welcome in. We are streaming on the Facebook group. Please give me a hashtag live, a wave, hashtag replay. If you're watching later, perhaps it's uploaded onto the YouTube channel by then. This is a spontaneous live, so it's not like I announced it and broadcasted it to everybody. So if you can make it, great. And if you can't, I greatly appreciate you tuning in for the replay. Please watch this all the way through the end, as you will get a lot of information on what does it really take to get a no-doc business loan? Is it really out there? What are the alternatives? What is happening with EIDL? How about getting up to $26,000 per employee in a payroll tax credit, PPP grants, and so much more? Now, let me begin by saying this. It's been an amazing week so far. It is Thursday, the 20th of October. We're getting close to the end of the month. So for those of you who are looking to get business funding, whether that's a line of credit, a term loan, an advance, equipment financing, maybe it's for real estate, there are a lot of different services out there. Right now would be the time to do it. And if you're in the middle in the underwriting process and I've yet to follow up with you, please be on standby. I most likely already let you know that we are looking at it, all of your documentation, and or it's already in the underwriting file, and we're looking at getting you an approved offer within a certain amount of time. So please be patient with us. And in the meantime, if you submitted a questionnaire form to be looked at for getting funding in a very personalized and customized email response on your best funding option and options, and I haven't replied back yet, I will get back to you. I did quite a few last night. I responded to emails thoroughly, and I will continue to do that today. Friday, Saturdays are my catch-up days. And if you don't know what I'm talking about, I'll post some links in the comment section momentarily. But let's already jump into this. Let me get onto the share screen. What you're seeing here, no-doc business loans up to 150,000 and 250,000 plus EIDL updates and 2 million plus alternatives, which is something you'll want to stick around to find out. Are those no-doc? If they are doc, are they low tier, mid tier, high tier? What are the expectations? So this is open. And what I tell most business owners, whether it is business credit cards, personal credit cards, whatever you're doing, installment loans, term loans, other types of loans you have on the table, be very careful about what you have going on there. Making sure you're not closing accounts. Make sure you're being careful about how you consolidate, especially on the personal side, that you're not reporting negative trade lines. And if you are, how to dispute those, how to fix them, anything derogatory. But we won't spend time on the personal side of the equation. I'll have more resources, if not here in the Facebook group down below, but in the YouTube channel. So I have here a pathway to higher funding. But what I need to show you here very quickly before I go into what is the actual place to start with and get a no-doc business loan, let me clear some things up. When I mean no-doc, as I mentioned earlier, but I'll expand, that is no business bank statements, no collateral is needed, secure your funding, financials, and that alludes to bank statements, but that can be year-to-date, profit and loss. You have the balance sheet, tax returns, and so forth. There's more additional information that would need to be supplied if we're looking at higher tier documentation services. And perhaps you are a startup. So this, again, it is startup friendly. And if you are a non-startup, this is something that I highly recommend you jump on top of as soon as possible if you haven't. Let me move this over. That's something moving there. But with this in mind, there are low doc, there are no doc. Let me do this, no doc. low doc, mid doc. We'll just call it mid doc. And then high doc. And each one of them serves a purpose, as in, well, of course, you supply more documentation as you go into higher services. And this can be anything like SBA loans, perhaps a term loan if you're looking for north of 100 to 150,000 and above. Not specifically, in instances, it can be secured financing when we have to look at a little bit more inventory, higher pieces of equipment, real estate. And I have quite a few people recently who are trying to sell their inventory as one example, and I've yet to get back to you if you're one of them. So I will get back to you in a moment after all this. And the reasoning behind a lender not wanting to take your inventory, even if it's acceptable enough, they cannot sell it as fast. It's too niche. The market isn't speaking to that. The revenue perhaps you're generating, they want to, with what you're trying to sell, they want a minimum requirement, and it's different for each situation. So it's always best to have a look at it, and we'll evaluate it. And there's a lot of these where it's a little bit more trickier and a lot more hurdles to go through. But that's one moment. And then we have other forms of financing, mid-doc, maybe it's a line of credit, it's a lower amount of financing you're looking to get, so you don't have to supply much, maybe more just bank statements, a driver's license, and photo ID. But that's pretty much it. Or excuse me, a voided check. So driver's license, voided check, and those bank statements. And then when you get into higher amounts of funding that you can qualify for, it'll be like tax returns and year-to-date profit and loss, perhaps, and the balance sheets, AR, HP, AP report if needed. Lower documentation, you're looking at these types of financing programs where they can be like a cash advance, where it is just those months of bank statements, a copy of your driver's license, and a voided check, without having to get higher amounts of financing and having to supply those extra financials. And then no docs, that's the one we're going to focus on. And let me jump into a new screen here. So this right here, it is called the credit line hybrid, and you can get up to 150,000 in unsecured no doc credit cards for your business, even when the banks tell you and say no. So this is a very lucrative, highly popular program that even I've taken part of, and it's so helpful in regards to helping you jumpstart your business if you're a complete startup who is looking for a private lender, an angel investor through that first, and then a venture capitalist thereafter. And you're wondering, what is the right way to do this? And you have a bit of a stronger credit profile. And I'll be very honest with those of you in here watching that there is no such thing as a private lender with no revenue, pre-revenue, little revenue that is going to give you a surplus amount, especially the first time around, without having enough revenue per month being generated, what it calculates to be over the year, unless you have a secured asset like heavy equipment, real estate, accounts receivable, unpaid invoices, and then they can sell that as fast. There's a market. It's not too niche, and there meets a certain revenue requirement to be able to make that. But with that in mind, you have to understand that there are personal/startup loans, and I'll show you that after this program. But if you are in that position where you can't qualify for anything else, you've tried crowdfunding, the friends and family, the other ways of trying to do this, there's also the 401k/IRA financing, the home equity line of credit, cash out refinance. There's a lot of other scenarios, grants, mixing multiple of these services. But you are going to find out with this credit line hybrid how you can even mix this with building your business credit at the same time and get access to funds on the back end that you can use time and time again. So please stick with me. So with this program, you can look at getting 0% interest for 6 to 18 months when your credit card stacking multiple business credit cards with multiple different limits. And what that then does to you is once you become a client who uses the card and the usage rate is at a position where, hey, then the credit issuer is looking at it and going, well, you're using this, you're making your payments on time. How are you making payments? What is your credit history like? And this is all looking better because it is underneath your business, not on your personal side of the equation, but you leverage your personal credit to get it. And that's what happens a lot of the time. And if you're in here wondering, well, I wanted to do this without having to supply personal credit. Isn't that the whole point? Well, no. Well, how else are they going to see what your history is and what your character is and how do you actually make your payments on time if they can even trust to even issue you a card? And if you have too many inquiries, if you have too much of this going on, there are alternatives that I'll kind of get into in a moment. So I'll link you guys to this in a moment. But the credit line hybrid is designed to help you get funding based strictly on your personal credit quality. Our lenders, they will not ask for your financials, the bank statements, no business plans, resumes, or any other burdensome document request that most conventional lenders demand. And this is one of a kind, its own. Listen, when you are out there looking for a business line of credit, it can be a little bit more difficult to qualify for those based upon what you bring to the table. So not every lender is created equally, but it stands to be the same thing when you're looking to get like a no-doc business line of credit. Yeah, they may be out there, but over time, as you've shown at least 5 years of history in making those payments on time, and you've already been accustomed to using these business and even personal credit cards, when they look at everything and they weigh it all, they can say, oh, well, you don't have to supply as much documentation because you are proven and it works for you. And then those limit increases and you have a minimum of a 5,000 limit is what a lot of them will like to see. But even in that regard, it will not usually be something that works. A lot of people are looking for these no-doc business lines of credit, these no-doc business term loans, these no-doc cash advances. And don't get me started if you're asking for a no-doc equipment financing, personal/startup loan, and or these SBA 7A/504 type of situations, and when they're government backed and there's a lot more documentation that is needed. But there are benefits to those when you get to an extent, especially when you're building business credit cards like rewards on purchases. You get to build your business credit at the same time and over time. And then you get to use unsecured debt. You don't have to secure it with collateral. And then the access to higher limits is something that can definitely help you grow over time. Now, back to this. And if I can't see your comments, maybe you have to allow StreamYard access. It's been a while since I actually came here into the group and I've done a live. So please hang in with me. You can post thereafter. I'll also have it posted on the YouTube channel. I may broadcast it back out to you guys via email tomorrow, most likely. So this is as close to a no-doc. Let me come back into this program as you can get with business funding. And the best part is that you can even get an approval with introductory rates, as I said, with low 0% APR, giving this program the best terms in the country. So when you're looking at those APRs, generally 12%, 15, 17, credit cards by no means are inexpensive. What you have to understand when you're getting a business credit card is even at 0%, even when it's not 0% interest and you're paying those 15 to 24% interest rates, guess what? When people come to me and they go, is this good or bad debt? And we can have a whole different topic of its own on that subject. And I can even go around personal loans or personal credit cards, business loans, auto loans, home loans, everything in between, student loans, and go far in between. But that's for another time. And you have to understand that good debt versus bad debt. When we're talking specifically business funding, we're not talking in anything else. It can be a bit the same, more or less. You're getting business funding with 0% for 6 to 18 months, wherever you fall within that bracket, and you go and get these business credit cards that you are eligible with. You can leverage your personal credit and your history. It shows enough, and you do far better. You don't necessarily have to start with those lower 500 credit card builder accounts. You can start off with more, and they can give you more room. And you get those credit increases over 3 to 6 months, depending on what card you have. You're with Discover. You could probably do it within the 2 to 3 to 6 month time frame and go back to them. But with other cards, they'll issue that likely over the 6 month mark and so forth. And so what you have to understand is that at the end of the day, good debt at 0%, yes, you use these, but you have to understand what it'll look like after those 6 to 18 months. What are you making payments on? So if somebody is a business owner, myself included, I take that money and I'm buying purchases of products and supplies, tools. Maybe I have enough to use it towards the purchase of equipment with that in a loan on top of that with a private lender, SBA, whoever that is. And I'm looking at it and going, well, what is my return on that investment? My activity-wise first, what am I producing with this? What is my history if I have anything? Now, if you don't have a pattern, it can be a little bit more difficult because if you're venturing into something new, whether you have history elsewhere or not, you'll be reluctant to think, well, I just needed the money. I can't make those payments. I didn't know the outcome of this, what my return on my investment financially then would have been. And so you're not planning a month, 3 months. You should be planning 6+ months ahead of time on this when you use these cards. And that's the amazing part, especially with real estate investors, how they make this. They make fix and flips, and how they make it happen on their return, and how they keep leveraging to get more properties and continuing to cash flow properly. And if you're a business owner as well, outside of real estate, you can leverage the same thing, whether you're a startup or a non-startup. So the approval amounts can go up to 150,000. Once you're pushed past 150K, you're looking into corporate credit. And I don't want to touch that subject too much right now, so let's continue moving on. Credit quality, you have to have it good, and I'll go into the parameters. Collateral, none. Documents, none required. Why do you need this credit line hybrid? Well, for one, you get a 24-hour pre-approval, so you can get started without a hassle and having to worry about how much time this will actually take if I can get approved for it, and you can move on. 0% interest for 6 to 18 months. Do I need to say more there? So you don't have to worry about making those interest payments that a lot of us, when we take business credit cards, and even if we're stacking on top of personal credit cards, it can be a lot to take on. And especially when we look at the type of payments we're making month to month, when are we making these payments on the due date, statement dates, closing dates, etc. It's a lot. And I don't want to get too specific on the business credit established side of the equation. But if you would like to, I will leave you resources down below for business credit building. And I'll show you a few videos that I created for you and my recommendation to get started there. Business credit that can also be used to help you qualify. Flexibility, you can use the funds to do what you need to do for your business. Even startup businesses can qualify. This is a true no-doc financing program. Application to funding, it's in 3 weeks or less. No upfront application fee. You get credit approvals up to 150,000 per individual. There are no collateral requirements, as mentioned. The ability for you to use credit partners to qualify if needed. And this is the best part about it. Are you struggling with your credit profile? Are you perhaps below a 680 and just fluctuating between that and over 680? And you're just struggling to get your finances in order. You're taking on a lot of personal credit debt. There are other things happening in your business where there's a lot of expenses rising more than your revenue is. You haven't even produced any revenue yet. There are a lot of issues that come into play. You owe people debt. So the ability for you to, be in that whole guarantor bucket and go underneath somebody else's credit, that is a huge advantage. And the difference is you have to understand, can you trust them? Or more so they're asking you, can they trust you? And that can be something you have to work out. Now, it's much easier for somebody to say that they have had a history doing something like this. So that other individual would be more open, and they'd still want to know more what their return is and what will be displaying on their credit, and how are you leveraging it, and what history is then being moved over to theirs later down the road, what is then being moved over to yours, if any. And there's a little bit more there to go through. There are no cash flow requirements. So no, hey, supply bank statements, your tax returns, etc. Can help build or improve your business credit score. And that is, I would say, the best part out of everything. Honestly, I would say that you can build your business credit score. And this is so important because when you're looking at getting financing, stick with me. When you're looking to get financing in traditional, like unsecured term loans, lines of credit, equipment loans, you have the SBA loans, the gauntlet, everything up there that we're speaking about, the cream of the top. If you don't have any kind of business credit profile, and I'm speaking about having your Dun & Bradstreet as well as with the other two business credit bureaus, you don't have no Paydex score reporting, you don't have your financials, there's nothing showing on these reports. You're not even monitoring it, not knowing what is happening. You don't even have a FICO SBSS score, which is something that you can't usually see, but we make a determination of when we're going through underwriting. It's business liquid credit, and it's also a combination with what's happening on your personal credit. And so with these things in mind, we're going to allow you to get approved for those types of monthly repayments. So a lot of you are wondering, well, I don't want a daily or a weekly, bi-weekly. Well, it's one thing to say that. It's another thing to have the actual profile and to see how you're managing your business your financials on your business, not attached to you personally, but what is your business displaying? Have you built any kind of trade lines? And that's what's very important about having business credit, not only personal credit, but business credit you can leverage on that side. And, when we focused on personal loans, and you may know this very well, on the installment accounts, the mortgage accounts, you have the revolving accounts, the open accounts, the term loans, you have the personal loans, the mortgages, car loans, all of these different things, revolving accounts. We can go even deeper down the road and see how you're managing your payments and how you are building these trade lines. And that's what you'll learn about with business credit, and how it's so important for you to have at least 2 to 3 plus when applying for higher tier documentation programs that will actually factor in your business credit and weigh it and see if you can get approved. But that's a time for another that's for another time. I've spoken about that already on the channel, that I'll try to link you to more content on. Many don't report to personal credit, some will. They just have to see what kind of credit history you have. And in a lot of cases, you'll see where there may be a personal guarantee involved because you're just getting started. And a lot of people who tell you, well, you can get business credit cards without personal guarantees, a lot of it is just a fluke. There are cases where it does make sense as you're building it over time. But a lot of individuals may start off with having to use a personal guarantee, and there's nothing wrong with that. The problem is you just don't know how to leverage your financials. It's about, how do I take this money? What will the benefit be? Does that outweigh my repayment? And if it doesn't, then it never makes sense for you to even take it. Like, why would you just take it if it's not going to help increase your cash flow? It might just help you with business operational expenses, debt consolidation, restructuring, and all of these circumstances. But to a degree, you have to know that, what is your in and out strategy? Do you have an exit strategy from it? So here's how the 4-step process will work. You can complete the form for a one-on-one consultation with my team, and they will be able to help you with. I'll be able to track along in the process. Step 2, submit your application for a soft pull on your credit. That's the advantage. Step 3, get pre-qualified in as little as 24 hours. And then step 4, you meet directly with the credit line hybrid advisors and get access to your credit lines. If you are not approved, you'll find out why, as well as what you can do to get approved. And there can be an alternative to that I have opened up here on my screen. You might not be able to see that one. Excuse me, because we're streaming on StreamYard, and I have to move tabs over for the moment. But there are other like credit facilities where you can also unlock your credit and cash to launch, grow, and sustain your business with corporate credit programs, business-directed retirement accounts we can look at. Like I said, there's also the 401k IRA financing and ways to make you build your credit even easier, and what those directions to take. So let me come back into this and move down here. So how do you qualify for the funding with the credit line hybrid? Below are these requirements for the credit line hybrid by either you or a credit partner who has at least the 10% ownership of the business. That's important. You have to have a 680 plus credit score with all 3 consumer credit bureaus. It's not enough to say I have one with Experian, but the other 2, I have none of that. You're probably 680, 660, 650, but you will want to get those other 2 up to a 680 plus. And that is just one part of the equation. It is very important for us to issue you business credit cards and a determinant of how you handle your personal credit. And what we need to look at are those reports on how they are reporting, what is reporting, to say what makes sense to actually give you in terms of limits, what types of credit cards. So credit card 3 years old with a $5,000 plus limit. It must be a primary card. Minimum of 2 open revolving accounts within a year and a half of good payment history. Under 40% utilization on all revolving accounts. I want to make a good, I'm not going to get into the whole personal credit because I can go on for a good amount of time on this. And when they're telling you under 40% utilization and on all revolving accounts, that is putting it rather nice and giving you a lot of flexibility. If you look at using personal credit cards, not away from the business credit cards for a moment, a lot of individuals, they max out, or you're over that 30, 40%. You want to keep it generally underneath 30%. So they're giving you that extra room, that extra debt to take on, especially as a startup. You know very well, as I do, that we take on a lot of debt to get us moving. in the right direction. And then we look at getting other forms of financing, perhaps to help pay those off and use it for other purposes, etc. But what I tell people is only use the credit if you have that money in your bank. Don't just keep using credit if you have none, and then you end up getting into a bad situation, or perhaps something reports the way you don't think it should when it should obviously be that way. Now you're getting yourself into a whole credit repair situation. But I would even say max, that's not what you want. At least 1 to 7%, 1 to 5% you want to use with personal credit cards alone. And that's why it makes sense to have multiple ones. You have ones with like 10, 15, 20,000 plus, so you're only using a little bit, and your overall total score is what's going to reflect that and show on your credit reports on what is actually is it doing. So let me come back into this part. No more than 4 unsecured accounts opened in the past 12 months. No more than 4 to 6 inquiries per bureaus in the last 6 months. Preferably, let me see what that says there, because I have the HP lighting on. Preferably less. Okay. No bankruptcies within the past 7 years. No open unpaid collections, liens, or judgments. So a lot of this can disqualify you. And I get it. If you have this, especially the inquiries per bureau, that's where a lot of people end up having a lot of problems with. It's these more or less that can be worked out. But it's when it comes to the inquiries that can drop a lot. And then that would then be a difference where then we can be going to a different direction. This program does require a personal guarantee from you or your credit partner if you use one. No authorized user accounts for qualifications. You can pre-qualify there. I'll share the link in just a moment. Actually, let me see if I can get it up here. Okay. Well, it doesn't look like it's able to post here. I'm trying to see. Oh, I think it's posted. I have to go to the Facebook group on this one. Before it used to let me post here. I gotta move it. 1 second. Come back into the group here. Comment home. And then I can see it right there. So I'll come in here and I'll post it. There it is. Should be in the comment section now. Now I can see it pop up there. And let me move this out. So these are terms that you cannot beat. This program, it offers some of the best terms around, including interest rates at low 0% for 6 to 18 months. Interest rates, they vary with each credit line that you have. So how much does it cost? There is a one-time success fee of 9.9% that is due after you have received access to your credit lines. If you don't get approved, you don't pay. Best of all, you can use your new 0% credit lines to pay the success fee. That is amazing. That's a lot of flexibility. And success fees, these are a very common thing, especially like with the employee retention tax credit, where you can see a little bit of a higher payback on what you get. And that's because they're fulfilling on all of this. They're looking through your file. And like with the employee retention tax credit being a bit different, where they're having to fulfill on letters and go through the bureaus and look through everything to make sure everything looks clean, and the amount of energy and work they have to put in, it makes sense why they would offer it to be a little bit higher. But you can use that to your advantage with that situation. Multiple financing options are all in one place. If you're wondering if the credit line hybrid is right for you, you can find out now. And if it isn't the best fit, we have multiple other options with easier qualifications and better terms. You can find out how much you can qualify today with the Business Finance Blueprint Qualifier, and lets our team you find the best option for your situation, and you can explore those there. Okay. So now let me come back to this document, backspace, and go into a second segment of this, where I will speak upon the personal/startup loans. So if you're questioning, what do I need to supply if I'm looking for a personal/startup loan, one that I'm using for business primarily? So another great option if you're considering this outside of a credit line hybrid, but I would match the two. What I would say to each and every one of you in here watching is make sure you're combining multiple services. I'll show you a little bit about that at the end. But with the credit line hybrid, you have the personal loan. Well, you're working on the credit line hybrid on the back end. It's on your business credit. Personal loans are on your personal side. Startup loans are as well. And so you have to think about this and go, what can I always do in the meantime? If I'm looking at getting my credit increased, what can I do with my personal? And then at the same time, can I work on building my business credit? And I'll show you a free video series down below and a little sneak peek inside of it. Another great option behind this, like I said, it is the personal / startup loan. Your requirements, you want to have at least 50K plus in annual revenue, a 700 plus FICO, a 680 can be acceptable with some circumstances here. 0 time in business, but it requires at least 5 trade lines there on the personal side of the equation. 6% to 18% cost of capital. That's your rate or your interest rates. 24 hours, 1 to 2 weeks. You get time to approve and fund. No, this origination fee, it is 15%. And I know that may sound a bit high, but listen, which I know sounds that way, but that's how the lenders compensate themselves by offering you a low interest of 6 to 18% with monthly payments in terms of 1 to 5 years. Like there's more benefits that outweighs the con. And I'm not even saying that's a con at 15% because you get all of these other parts of it and what they have to fulfill on and what documentation they have to look at, because there's a lot of files where you may not necessarily get approved for as much. So they have to work those files even deeper. It's like an SBA loan in a situation where those lenders that lend below 350,000 don't necessarily spend a little bit more time on those files than the ones 350,000 and above, contrary to popular belief. Important details: have less than 35% utilization, minimal recent inquiry, strong credit history, no recent negative items. Now, I see this a lot when I get it back from underwriting, like, oh, yep, you have 45% utilization. You have about 10 inquiries in the last 6 months, 3 months, 12 months. Like that won't work. Strong credit history, you don't have that. There's no credit worthiness and it is considered thin credit. No recent negative items. I want that on your reports. Make sure you clean that. And if you're looking for credit repair services, I'll link you to that down below if you're watching this later on YouTube. If approved, you will have to supply driver's license, bank statements, tax returns, pay stubs, utility bill, and or. Okay, so verifiable income. And we're talking like the tax returns, the pay stubs, or. Example, if you have verifiable income, for example, of 90,000 a year, tax returns, pay stubs, etc., we may be able to approve you for like about 40 to 120,000 via a combination of installment loans, LOC, or credit cards. The LOC stands for line of credit. So that will also help you in the application. I may show you that and how to get started and what the expectations are and where I recommend you go to and the process of it. Okay, so now let me switch channels from there. Let me find one of my other tabs. One moment. And if you need to get in touch and you haven't, fill out the questionnaire that I'll leave you to down below in the description. Again, if you're watching this later on the YouTube channel. But let me see my other tabs here, which I wanted to flip back to. Not the SBA 7A loan just yet, but the importance of building your business credit. Let's go into this. And then we'll close up shop in a moment. So I have this free video series I will link you to down below. How to rapidly build your business credit and get access to over $250,000 in funding without being tied to your social security number or personal credit score, even if you are a complete beginner or have tried and failed. You can click the button below for immediate access to watch and learn to build business credit method, my method here, that can get you set up in as little as 3 days. So I'm going to just quickly go through this and show you what it can look like on the inside. Give you guys a quick look. Give it a second to load. Normally it doesn't take this long. It's like when I'm doing a live is when you'll see that for some reason. Oh, I think I know what's happening. So I had I had a requesting on my site because I had to clear the cache. And I think that's what's conflicting with this. Just before this live, I had to work on that, but it is down below. Yeah, that's the reason behind it, because of the cache issue. So it might not work right away. And it's something with the hosting that it's interrupting. So I'm going to just go to do this really quick. See if this one works. Yeah, that's what's happening. So let me see if I can jump back here. I'll show you guys my WP back office. I'm gonna flip this over and I'm gonna try a different tab, see if it gets me the same issue. It's a cache thing again. I've had to be clean. I've had to clear it multiple times recently because it's been getting in the way. And I might just switch over to Explorer after this one. Okay, let's try this one. I have it open on another tab. Yeah, it's doing that. So let's go to Explorer. Now I have a different browser. And yeah, it's the cache. So I'm going to have to look into that. But once you go ahead and enter those details, you'll come into the page where you can get started on it. Let me go into my WP back office on this one. Yeah, it's a bad request. That's what's happening. So you're not seeing it on my tab, but I have another one open where it took me to a bad request because of the cache. I normally have to clear it, and I don't want to do it on this live right now. I'll do it thereafter, but it does work, just so you know. You can click there and go through it. And let me see if I can see. Watch, you'll see this happen. It might happen to you too. Watch. See, you guys see that bad request up here? It's because it's a cache thing, and it's been happening recently. So I just have to go in there and fix it. But once you are in there, you'll see a couple of videos you can walk through and check them out. Let's see if I tried this. Yeah, it's bad request. So I can't access my site. I just have to go in through it and clear the cookies. And that's what the issue is. It's the cookies. But it is right there. Now let me move over to a different tab and go over the hybrid SBA 7A loan really quickly. So I'll also leave more information on this SBA 7A loan down below. I don't want to go into it in depth because we focused on the no documentation program. But if you're looking to get an SBA loan and you meet the qualifications, I will have a separate video for you down below where you can get up to $5 million. But credit is also a requirement where it should be high enough. Usually 650, 660, if not 680 is best. And 2+ years in business with sometimes 120,000, 150,000 can get you in the door for an express loan, but more north of 150,000, more over 200 to 400,000 plus can put you in a range to get the SBA's S7A standard loan up to from 350 to 5 million more so. And that's going to require more documentation, as you see on the screen here, like the bank statements, the recent 6 months of bank statements, profit and loss balance sheets, year-to-date profit and loss. And there's quite a bit more that I will look for. And then as the process goes, we might ask for more information from you. So here, let me now move over from that tab over to something that I have already released. Oh, and it won't show it either because of the bad request. Oh, it did. Okay. So it's only for certain pages. That's what happens when you have a cache cookie issue. And it's just conflicting with one of my plugins. So that's okay. This is the whole part of being an entrepreneur and business owner. There's always something that can go down. And it's fixable. You just have to take the time to look through it. But if you haven't heard, I created this Business Funding Mastery Academy course that is now live. And I'm giving it away for free for a limited time, perhaps. I'm not sure if I will keep it open free forever. I may just do that. I haven't come to 100% decision on it. But I would get in early as soon as possible and get grandfathered in. So if there are any other updates and you don't have to pay perhaps for any of this, I would recommend doing it. And this is a course unlike no other. And I sincerely mean this as an expert business loan broker who's been doing this for a while now. Every person's situation is different. There are programs out there that have certain requirements, but you can still come in and be looked and assess that because you have a unique situation. Until we actually look thoroughly through that, we can make an adjustment. But what this will do, it takes you through the fundamentals. It goes from the very top of business funding origins and the strategic approach, my processes and why it should matter to you. Are business loans a good or bad idea? The who and how of business funding, strategic partnership and roadmap for long-term success, business loan interest rates galore, terms and rates methodology, and the list goes on and on. You're seeing that right there, and a lot of people are taking advantage of this and loving it. And so here's a welcome video. But before you even land on this, there will be a registration page. And if you have already registered, you should be able to go back into your login page, if not this one here already. And so I already came out with the video on how it looks, so I won't spend too much time on that. I'll try to link you to it down below, and from there in the description you can get started. But you see something like this. Next lesson, see bad request, there it is. Because it's a cache issue. And it's okay, the other video will show you that. We just adjust, right? We're business owners and we adjust to things that happen. Now coming back to one of my other forms that you may not be able to see because of this bad request. Let me see if I can open it up though on my screen. Okay, there it is. This one does show. So let's click here and then replace it with that link. What you're seeing on your screen, get the funding your business needs fast. You can select from the 2 buttons below to fill out the right funding questionnaire. And I'll show you what it looks like. Non-startup or startup with a little bit more information. Plus you get a free 6-step pre-approval lending checklist from myself that I've created. You can learn more about myself here. And to get started, you will want to select one of these options. You might see a different page come up if you already have my checklist. But get the funding your business needs fast. Complete the questionnaire form below to get a personalized and customized email response for your best funding option and options. Plus, get a free 6-step pre-approval lending checklist to get you approved for funding much faster. From your name all the way down to additional notes. And then more there, congruent to what you saw more or less on the last page, but this will show you how it works. You submit it, it'll land in my inbox. I'll evaluate, analyze it, and give you a proper response back. This is my processes that set me apart from anyone and everybody else. And I've been destroying, and I say that in a very nice, humble way. And so many people, they try to look for business funding themselves, and they end up running into roadblocks. You end up thinking what you're doing is working. And it may be, you might get lucky, but you don't know what you're doing by giving information out anywhere and everywhere. Is it protected? Is it safe and secure? Even if you just gave your information out and it's safe and secure, that's not the best approach. I have the best lenders and underwriters. I'll show you which one is best, which is a direct lender partnership. We go directly or we go through the brokerage route where I have already those direct lender partnerships. And a lot of the times right now in this market, the brokerage route is the way to go. And I already have those direct lender partnerships, and it gives you more flexibility. Think about it as like a chamber. You put in the reactants, you put in a recipe, you're cooking up something, and you're putting all the ingredients together. And in this other situation, we're kind of more or less doing the same thing, but something's missing. And you won't get such a good cake that comes out of that. Over here, you may have one ingredient that is missing, but the result of it is, hey, we can adjust, we can restart, or we can look at this, it's fine. And we'll do with it. But over here, another lender may be more scrutinizing, especially if it's your first time and you have all of these other issues in the past that they won't want to approve you for, and they'll just decline you, even if you have strong revenue. And there's other components that they look at. And if you don't get the flexibility, types of early payment discounts, no prepayment penalties, and all these other factors. So that's the questionnaire form. What I do want to spend a few bit of moments on are the alternatives, more or less on what you can get with funding outside of what I have already shown you. Now, you have a variety. I already went into the credit line hybrid with a no-doc. I went into no-doc business lines of credit, which normally don't exist. You have to have extensive time, usage, and it has to make sense. And it can make sense if you have a business line of credit and you get more limits and you gather more, that can be a result. But even then, it's pretty difficult. Everything and anything you're going to see usually requires a personal guarantee on the front end, which is not a problem because you should be held accountable and reliable how you're using this money. If you're taking this because you just need to survive, well, you couldn't get a line of credit, but you're looking at getting a lump sum and that cash flow is going to hurt, then it doesn't make sense. And I created content already on how to get a monthly repayment, a biweekly, a weekly, a daily. I reverse engineered backwards from the different services and what you need to have, fundability attractiveness to myself and the lenders to qualify for those types of options, and how to use multiple services to help you create the fundamentals and help you explode your business. So you have things like merchant cash advances. You have unsecured term loans, secured line of credits, unsecured lines of credit, equipment financing, lower tier documentation like those cash advances. Sometimes the term loans, it depends on what you're looking for, but normally you would want to supply a little bit more bank statements. And then there's quite a few more we can go into, but I want to just leave it at that. I believe I'm just thinking here. I covered everything on the 0% interest, the alternatives up to 2 million, 5 million, SBA loans. I included that into this video somewhat, and all the other services. If you want to learn more about, look down below. I'll try to leave videos too if possible. But what I would do is get your head into that questionnaire form, and my processes I'll show you, and check out the course while you still can. Even if there's a price behind it, it is going to be well worth your education. I tell most people to have 3 things: have an open mind, allow to give feedback, and have patience in the process. And if you can allow yourself to do those 3 things, we are going to work just fine. But if you just even have one of those missing, like you have open-mindedness, but you never provided feedback when I asked of it in part of the underwriting process or even before or thereafter, and you just went ghost, and that's not very responsible and a very good characteristic to have. You just want to follow up with something simple. Say, hey, I'm not interested, or hey, I'll look back on this. I'm quite busy. That's better said than just leaving somebody ghosted. And nobody wants to do that or be felt. I don't want that feeling. Put yourself in my shoes as I put myself in your shoes every day. And I'm very considerate of what you're trying to accomplish. Just so you know, I am. I put myself in your shoes and I take care of you on a personal matter, human matter, better than these robots or these other systems and brokers and agents who overpromise and underdeliver. I won't do that. There are specific situations, though, where they're so unique that we have to take a look at the file. We can't promise anything. And it gets so specific that, well, what will the lender look at? And you won't know until you submit something. But just know if it's a soft pull, I'll let you know. For a lot of these are. Some of the term loans are hard pulls, but some of them are soft pulls as we do an in-house situation. If there's a hard pull we have to look at, we'll let you know about it. SBA loans are hard pulls. Personal loans, they can be soft pulls. So yeah, keep that in mind. What else is there? EIDL loan updates, not a lot happening. There's so much with the SBA EIDL grant, 10K, that still has to be looked at. For a lot of those of you who are making payments on your EIDL, make sure you are on time. Go through your CAF system to see what you are borrowing, how much you have to pay, what's your balance, and then go through that pay.gov if you're doing it online by mail. There are other ways of doing it, but the pay.gov site is the best way to do it. That's how I would go about it. And make sure you're on time. October, November, those of you who are coming up to that date. And we're trying to focus on getting the EIDL loan to 1% and also that 20-year forgiveness if possible. But there's a huge stretch that we have to go through with the SBA for that to even happen and be considered a reality. So, one other thing. PPP loan, a lot of fraudulent activity. Be careful of that, the whole forgiveness. Then we're going into the employee retention tax credit, how you can get up to $26,000 per employee. That's a program that I strongly recommend each and every one of you look at if you can have the qualifications. And this is on a per quarter basis on what you would qualify for. But without going too in depth on if you meet them right now, I have a separate video I'll link you to down below on the ERC program. And what happens is if you qualify for that, even if you don't, you can look at that and look at bridge funding. You can look at the ERC while you're waiting to get that, or if you couldn't get it. And in the meantime, you can look at getting bridge funding like these merchant cash advances, unsecured term loans, lines of credit. We can combine a few of those services. Perhaps you qualify for an SBA loan, but you want bridge funding in the meantime. So now you have the ERC program. You can qualify for an SBA loan. You're getting bridge funding that then can be consolidated if you go get approved for the SBA loan, or perhaps you're looking at getting funding in terms of securing it with an asset. And not all assets are created equally. It's such a touchy subject and field that even with lenders' requirements, they still want to look at your inventory and see what you have on hand. What's the cost per unit? And not in all cases will it turn out in your favor, because it can be, again, like I said in the beginning, the market for it. They want you to actually meet a certain revenue for what you're trying to accomplish, because it would be too much of a loss for a lender to take a chance on projections of this stored here or that. And it's just too much for them to see that it's not as concrete. And every situation, again, is different. But that'll wrap up everything from me. You got to see the credit line hybrid, no documentation, what it takes to actually get that, how in other types of funding like business loans, advances, how it's more of a low to middle to high tier doc. Not necessarily is it all going to be no doc. They'll still want to see that because they're basing it off of revenue and they need to look at those bank statements, financials, etc. But you have to see how this is good for startups, non-startups. Get started down below in the description. There'll be a link. There'll be more information on the credit line hybrid if you'd like to learn more about it. For all other information, please look down below. If you got value, please give it a thumbs up. Share with others so you feel will get value out of it. It can be a complete stranger, a friend, or a family member. And you know, at the end of the day, when you rest your head on your pillow, you can go to sleep at night peacefully, subconsciously, and consciously, waking up in the morning feeling more refreshed and knowing that you made a difference in somebody else's life. And when they are able to wake up, they don't have to feel frustrated that they have to go through their day thinking about all this financing and how their business is just backtracking. And if I don't get money in this contract and this is the result and the outcome of it. And I just can't. What do I need to do now to prepare for the winter? What do I need to prepare for? And I tell most business owners is do not wait until winter to come and the fall to end. Get funding before the end of this year if you do have a use for it, even if it's a longer term, even if it's a lesser term. Good debt, again, versus bad debt. It's understanding that you won't always get 3 to 10 years. You won't qualify for that. It doesn't always make sense, even if you did. So if you took 1 to 2 years, 3 to 12 months with this type of revenue, unsecured financing, not longer because it's unsecured, what is the goal? What are the outcomes? How am I doubling, tripling, quadrupling my money, if any? And is it growing and expanding my revenue? What is it doing? So good debt is being able to take that, multiplying your money, and having sufficient proper cash flow at the end of the day. Maybe it's not the ideal number you wanted, but you're working towards that and you're growing. And then now you're getting into that. Profitability in your business is another reflection. So bad debt is taking that and saying, even with the 0% interest, you don't even know what you're doing with it thereafter, how you're going to be able to make the payments. How am I able to take $20,000 on a cash advance? Like the other day, an individual goes, I have a $60,000 PayPal loan, and they're telling me I have to pay about 1,000 to 1,350 or so a week. And I go, fine, that's okay. You're getting 60,000. You're saying that I don't want to pay 1,350. Who does want to pay that? Nothing is inexpensive anymore. And the difference is somebody who takes 60,000 is going to multiply that money in their revenue. They're taking 60,000. They're probably doing around 50 to 60,000, and they're going from 50 to 60 to 70 to 80. As opposed to saying, well, I'm going 50 to 60. No, I'm going 40 to 50. Well, you're backtracking. Well, where will you be in about 3 to 6 months after that? Where can you realistically be when you're paying that off? What would be an extension of that if you were to receive more funding and financing? So these are other questions, good debt versus bad debt. And if you're thinking about using it, understand what you're getting yourself into, because if I'm doing this at the end of the day, how am I multiplying my money? That's what I will leave you with. If you haven't subscribed, please click the bell notification icon so you do not miss any future videos. Talk to you soon. Take care. Bye.